Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing selling pressure for a second consecutive session. We're pushing back down towards the low end of the range, which is also the low end of the range for the last several months. You have to go back to June to see the 10-year note futures trading at these levels. 131.23 currently. And with this price action, I think there's a couple reasons why we're seeing the selling pressure for a second day. I think one thing is the sentiment in the market is shifting as we move towards these big data points the next couple of days. ADP tomorrow, non-farm payrolls on Friday. And we're seeing COVID cases down for a 16th consecutive day in the U.S. So a 2-week trend lower now. And I think that that's leading into the sentiment in the market to some degree, helping to support the fact that maybe economic activity will be able to maintain, that the Fed will be able to maintain its current course, which appears to be tapering sooner rather than later. And I think that's why you're seeing the markets adjusting for that. And also this strong move in the equity markets, I think, is why we're also seeing some selling pressure in the treasury markets as we're seeing a rotation here today to some degree as well. Looking at the yields, 10-year yield up 5 basis points, 153 basis points now back over the 150 mark. And when you look at the yield curve as a whole, we are seeing it shifting higher today as we're seeing the 7s, 10s, 20s, and 30s all selling off quite substantially today and pushing that yield curve higher.